We are taking a look at the week ahead. What's on the watch list, James, for us in terms of, you've got your Forex Factory pulled up. What are we looking at?
Yeah, so nothing today, but at 2 a.m. tonight over here on the East Coast, we do have the climate count change over in the UK. And then Tuesday, so tomorrow morning, we will have CPI numbers over here in the US. So that'll be a big one. We actually have a really action-packed week this week with 3 days in a row. Tuesday, Wednesday, Thursday are going to be big streaming days. So like I said, Tuesday, CPI at 8:30. Wednesday, we do have GDP for the UK again at 2 a.m. over here on the East Coast. But we do have PPI at 8:30, followed by FOMC at 2. So we are going to hear from Jerome Powell in the Federal Reserve about the new United States interest rate. Currently sits at 5.25%, forecasted to remain unchanged at 5.25%. But it'll be an interesting one because the Bank of Canada and the Bank of Australia, I believe, were the other one, had some interesting interest rate reports. The Bank of Canada had an unexpected rate hike last week, so some of the other central banks are looking a little bit more hawkish. Could that influence the Federal Reserve's decision at all? I don't know. We'll just have to see. But yeah, PPI and FOMC happening on Wednesday, so that'll be a big one. We also have some other things like New Zealand GDP, Australian unemployment rate, all happening after we'll be out of the office. So can't live stream for that, unfortunately. But then on Thursday, again, another big day. We have the Euro area, the European interest rates right now currently sitting at 3.75%, expected to raise 25 basis points up to 4%. That's going to be at 8:15 a.m. Eastern time. And then following that, immediately after at 8:30, we have retail sales, unemployment claims, Empire State Manufacturing Index. And then even after that, we have the ECB, the European Central Bank press conference, where depending on what they say, maybe we could see a little bit of get a little bit of insight into their hawkishness, their dovishness, and we'll just have to monitor what they're saying there. And then following that, we actually have the Bank of Japan is also having their new interest rate decision Thursday night as well. And Friday, we are going to finish up with preliminary consumer sentiment. So a nice, easy stream to end out the week after a hectic Tuesday, Wednesday, and Thursday coming up.
What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half-off discount sale.
Oh, that's right, I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals, where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now.
Frank, gold coming down today. What are your thoughts? Dollar up, gold down. Is this going to last, or do you think the dollar weakness comes back in?
So I'm kind of trying to go off of smart money to help gauge predictions of what the Fed's going to do. So I think up until that point, we're just going to see a lot of weird moves in the market. But then again, gold is pretty unchanged from COT. There was a significant change in the number of shorts, which is kind of promising. They're getting rid of, the bearish biases. But overall, I guess still kind of mixed. The dollar looks pretty mixed as well. A slight lean to the short side. We got Euro as well. I think that is also mixed or bearish. Yeah, Euro is bearish. But based off of what COT is doing, it kind of looks like, so take a look at the yen. Yen is bearish. We're looking at a change in longs and shorts, which is a positive number of shorts added, negative number of longs added. So in other words, they took away their number of long positions. So they're probably looking at an unchanged rate, which is pretty expected from the BOJ, and then probably a bullish statement or a dovish statement overall from them. SPX kind of surprised me though, because
Yeah, I was going to ask you about that.
a lot
You've
of
got
shares.
S&P coming in long. I'm sorry, big increase in long, big decrease in short. That's probably, in terms of COT report stuff, that's probably the most interesting stuff we'd see today. S&P again, the as you mentioned, 67.8 thousand long contracts added to S&P. At the same time, a large decrease in short positions. It seems like, Frank, we might be getting our first signs of smart money tipping the other direction on some of the stock market stuff. What do you think? Do you think that is something that persists?
You know, it might. Once we hit that official bull market, things kind of changed, I feel like. But, you know, for the past month or so, they were just picking up more and more shorts. They're getting more and more bearish on the stock market. And then once it hits these highs of the year, now all of a sudden they're bullish again. So it's a little confusing, but price is up against some major resistance, which was a high from 2022 in the 4,300s. So good spot here to see a pullback, and if it breaks above, then I see another test at the top of this channel. You know, it never really did complete that move, but you know, I can keep saying limited upside, but every time I do, it breaks to another level higher. So we'll see. I'm holding on to stocks. I saw you took a trade on the S&P, but I'm actually interested to know what your analysis is around it. Is it just like a shorter trade that you're trying to do, or hold on to this thing through the bull market?
Yeah. So I'll talk a little bit about the S&P trade that I'm in. I talked about this earlier. So I could show you the trade here on my screen. So I'm looking at the S&P, and price, it was kind of a momentum play yesterday, Frank. I mean, granted, there was the announcements that, you know, hey, official bull market and all that, and that initially popped the market. And I saw that as actually a very bullish thing. Now I know it's a little bit sketchy because it's like, oh my gosh, when people start shouting bull market, that's a little concerning. But I think that, you know, although the market has been strong, and the S&P specifically has been strong, the NASDAQ has been incredibly strong. I think that there's a lot of people who are like now wanting to get back into stocks. Perhaps they bought into bonds, you know, perhaps they have been cash heavy on the side. There's been a lot of money that's been waiting to deploy. And I think with like sort of the announcement of that, I think we get a lift. Now, I don't necessarily think that, to your point about limited upside, I'm not necessarily against that idea either. I'm kind of trading just the momentum. I think right now there's a lot of optimism. Until that optimism fades or we see some sort of significant breakout the other way, I'm going to generally just be picking up the S&P 500 on pullback longs, because although, yes, it's high, I'm a momentum trader and I'm looking to essentially, in this case, buy high and sell higher. I'm looking to try and capture momentum, and I'll stop out if I need to, but I'm not really bargain hunting on the S&P. I'm trying to just go with that momentum with a lot of optimism. And, you know, still the thing is, Frank, like there's optimism, but it's not an outright optimism yet. It's not like the Fed has said, you know, we're not going to rate hike at all further. We are, you know, they've basically still got this mantra of like, you know, we're going to pause with the potential to rate hike later. And I think the market is still watching their narrative there and saying, you know, they're cautious, they're fearful. I still think that, you know, the economy is going to slow. It has been slowing. I think that's going to weigh in on the Fed's sort of next moves going forward. And with that, more optimism is going to continue to seep into the S&P 500 that, you know, we had strong job. We still have a strong labor market. We still have, you know, consumers are slowing, but they're not getting destroyed. And I think that there's this kind of narrative where like, okay, if the Fed is somewhat pausing and the economy is sort of still kind of gradually slows, they may not need to put on the brakes too much. And these stocks, which are still overall holding up very well, could have explosive upside from there. Again, that's the bullish side. That's the optimistic side. I have a stop loss in my trade for a reason. If it does come underneath these structure lows, I'll be out and I'll look for another chance to try and long it. But, it's a momentum trade for me. It's not necessarily a value buy by any means. Frank, you and I, we picked up a lot of things over the 2022 drop and even early this year when things were still very low as sort of more longer term value buys. In terms of longer term investing, I'm not buying anything up here. And I'm talking, when I say longer term, for me, what that means is 2 to 5 year outlook. I'm not buying stuff, but momentum trading, I'm all over it. I'm trading, the S&P, potentially the NASDAQ. And we've got to talk about gold. Where are you at with gold? Are you still in a trade?
Yes. But to your point, yes, it is a trader's market indeed. Especially in the indices where things are range bound, things are making lower lows, then following up with higher highs, just bouncing off all these different trend lines. You draw a million of them and they will just respect it to some degree, and like regardless of fundamentals, they'll just move, which to this point is something that I like to focus on too, for gold at least, is this long-term trend line. Just how long it's held up for, and how healthy this uptrend has been over several months since November of last year. So we're coming up on this big level of support. It keeps wanting to stick to it, but it's also got a common bottom down here in the 1940s, 1930s. So overall, it looks like buyers are stepping in and they keep wanting to, prop this thing up. And I feel like at this point, if gold was meant to go lower, then, it would have happened after like that second or third attempt. So I'm still pretty bullish gold. Obviously smart money was not very active, but I think what it's going to be is very volatile until we get that Fed announcement, what they plan to do going forward. I think expectations are pretty high. We're going to see a pause here, unless CPI is just out of the water, which I doubt it will be. So I think that there will be another rate pause, or our first rate pause, and then we'll go from there. But I think gold, as long as it's at this level, and as long as we're expecting a more dovish Fed statement, I'm pretty bullish gold. I see a test at the 2000s at least, and then hopefully at the highs later on.
Yeah, it's an interesting story watching the gold price, and Frank, I've been on the bullish side of fundamentally on gold as well. Part of the reason for it is it's all about the Fed, right? And the concept of a pause is a step in the right direction. I think, some people would argue a pause is just a pause because we've done so much before, it's a pause before we rate hike further. I think, we'll have to watch and see how the data plays out. You mentioned the key CPI number coming out tomorrow, and on Wednesday we have the Fed's decision, where we also have some guidance to look forward to as well to see what that does. We also have several central banks reporting this week. We have the ECB on Thursday. It'll be interesting to see where generally the trends are headed. We did see some pretty hawkish stuff out of BOC and RBA last week. That is Canada and Australia, respectively. But I think that, gold has been a little bit spooked by some of that recently. That's maybe why we see sort of a range-bound market in gold. Specifically, we could cross-examine, Frank. The gold market has traded pretty sideways because, again, it is paying attention to a lot of central banks, right? It's not just paying attention to the Fed. It's looking at the RBA. It's looking at the Bank of Canada. It's saying, because people from outside of just the U.S. are, of course, buying gold. In fact, gold is traded very heavily in the London exchange. So you have gold paying attention to lots of central banks, and it seems like the S&P 500 paying close attention to, of course, its central bank, the Federal Reserve. So it's kind of an interesting story because in one hand, you have kind of a pause-focused, perhaps optimistic stock market. I think, like I said, if I'm buying it for value, I'm very cautious up in these areas, but I'm trading it short term. I just think that, if you're looking at it for value, I could conjure up a bear case in the sense that, you're not out of the clear here. You're not, you're not buying it. You're not getting it at the lows. We've had 6 weeks, 7 weeks of straight upside for the major indices. You're not getting value. So what are you buying it for? You're either buying in a momentum play, or you're perhaps getting caught up in some of the latecomer effect, where a lot of people who are now seeing, bull market, and they were super bearish going into this year and they were all in bonds. It's a little sketchy there.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.